Welcome to the Corporate Venturing Insider Series, where I interview top practitioners in the CVC world and learn with you the best practices and golden nuggets that they have accumulated over their career. In this episode, we will be learning from Xin Ma, Managing Director at Total Carbon Neutrality. Xin, could you take a few minutes to share your story and how you got to where you are today?
Thank you so much, Nicola. It's such a pleasure to be here and to have this opportunity probably to exchange and share with fellow investors and startup and a bigger community. I'm raised and born in China in a kind of coal province, important energy for China and India. And then I left my province to go to Beijing to study in University Science and Technology in Beijing. And I quickly moved to the energy sector by doing my master degree in University Petroleum. So from University Petroleum, I started to work for one of the top national oil companies in China called TCN PetroChina. And from there, I was just curious about the international elements of this energy sector. So that brought me to Scotland with my doctoral degree in energy economics. And also I worked with Deloitte out of my PhD degree. And that's where energy really become very important. And so that's where I decided to join an international energy company. And that brought me to Paris. And from there, I started to enter into the business and operational parts of the company and started to work on the M&A and finance elements of the company. That's really where the energy sector started really also taking a lot of new kind of initiative turns. I had a maternity leave and I was thinking of changing my career and then looking at all these new trends. And I started to observe there's a division in Total that they are doing all sorts of investment at that stage. They're doing the hydrogen investment, distributed wind and IoT and all that. So I was really, really interested. I got in touch with the director at that time. And that's where I joined the team. So when I joined the venture team, we were still called Total Energy Venture at that time. And the investment thesis was the bio kind of investment wave. And very quickly, when I joined the team, the mobility became a very important theme as well, especially electric mobility when in China and in the US. And we see that Norway has really fantastically adopting electric vehicles very well. So from that year, we have done a lot of mobility related investments. It's interesting because Asia is just important for renewable energy, for battery, for electric mobility, and for climate. It must be very interesting and very important for us to be present. So that's where with our director, Mr. Girija Natkani, we discussed and we agreed that it would be really make good sense for me to be more focusing on the investment in Asia. So I started a bit like a startup journey within the venture team, basically creating the Asian platform. So maybe quickly to share the Carbon Neutrality Ventures, we are a corporate venture with the International Energy Group. We are an evergreen fund of $100 million with 16 people, a small team investing globally. And until now, we have 60 investment in different startups. And also we have around investment in 12 funds.
So one of the things I want to cover today is really your focus in Asia, which is really a stronger focus than anyone else we have interviewed so far. Your approach was quite interesting. You started by investing in funds rather than just going direct investment only. And I want to understand what was the driving decisions for you to start with investing in funds? And did it bring you what you expected? What was your learnings from investing in funds as your strategy to get into a new geography?
So we decided to go for the funds because we think in terms of time frame, because things move very quickly. For us to really have a coverage on the ground, it's so important to be aligned with some professionals already on the ground, in the ecosystem, in the landscape already. And I think what we did, we are pretty happy with what we have done is to looking for those like new capital and capital, those partners, because they have a big landscape. They not only see the sector we are investing, they also have a wider range of other view on other sectors adjacent to what we are doing.
Very nice. And because you invested in 11, I think, and then you did your own anchor. So because you've invested in so many, you also can see the difference between them. So can you tell us, without naming names, but which ones was really bringing more value because of different best practices versus the one where actually, if you were to do it again, you wouldn't choose them? I'm not asking to name names, but is there things that the audience could identify to know which funds actually will work out better?
Our thinking is we already have a group of professionals within the team, and we have been investing since 2008. So if a sector we already know it's within our scope of expertise, we prefer to do it directly. Only refer to a fund. One is a new geography, and two, it's a new sector. Or three, it's something you need a lot of resource, a lot of industry collaboration in order to make this sector working. For example, hydrogen. So that's where we prefer to be in the funds with our capital and also leverage our partners' capital together to push the sector to build a kind of value chain and ecosystem. So each time, I think it's extremely important for us to really be clear what we want. Is that helping us to just putting our feet on the ground to have some people who provide with local insights? So that could be the case in China, in India. Or it can be something, it's a new sector. For example, recently we started to really go a bit beyond the border, looking at agri-tech things because they have such a big CO2 impact. So that's why we bring in the agriculture-related funds, because that's not traditionally our expertise. And also thirdly, the CCUS and the hydrogen, those are the things you really cannot do it alone, or even you put a lot of resources, maybe that won't help the sector to be mature. So with CCUS, we have OGCS, and with hydrogen, we are in the process of setting up some funds. All these funds we have selected are really great professionals. What is really important is us to be clear what we want. Sometimes probably we were thinking we're going to be that in geography and we invested, but at the end, we didn't have the resource to follow up in that geography. So maybe it didn't turn out to be satisfactory, but it's really because probably in the beginning, we were not doing this clearly. So that's really make us very prudent and cautious to refine many times before we enter into the fund.
I can hear a few golden nuggets, but I think being clear on the why you want to do it, I think is very good. And I like the fact that you had different strategy for different funds. Some was for geographic, some was to go into a place you're not familiar with. And I think agriculture is really interesting because 19% of gas emissions is from agriculture. So this is a big move the needle kind of area. So I really like the fact that you're very clear, but there is another golden nugget you just mentioned, and I want you to double click, which is sometimes you invested in a fund and you didn't have the team to really follow through. And so many people think that fund is maybe a way of augmenting your reach, which is true, but without increasing your own internal team. But actually you need to prepare for that growth. So can you explain how you, especially when you have 12 funds, how do you grow the team that follows through with these funds?
I think that's a good question. Actually, I just realized it's time consuming in following the funds because they have so much deal flow. They just have a bigger size. We have a small tickets. We can leverage that bigger size to see so much deal flow. And sometimes they come across even more that they are not investing, but it's interesting for you. They set up database for you. So you can go into the database directly looking for things they have seen. So it's true that they take time. I think it's very important, actually, even if our focus is direct investment, it's so important to understand the GP-LP relationship and what we can leverage out of funds, because that can be very valuable. There's a leverage factor. And the second thing is sometimes you also need to leverage resource because very often the corporate venture, you don't have a 50 people team. You normally 10, 20, a bit more, but we are not a very huge team. So that's where you need to leverage also a virtual kind of ecosystem within the group.
Very nice. This is really good to share. You also mentioned some of these funds give deep dives. Any best practice on how to leverage deep dives so that it really helps you and your team?
Yeah, I think probably most important thing is to know really what are the specialty of the funds, know the investment personnel, who are the best person to go to cover these fields. And also to find the overlap between funds and us. Not only this will be important for the internal stakeholders and also the funds is capable because we don't want to be an LP that we invest in a certain amount and we ask the fund just to do the fresh study for us, do the fresh mapping for us, do the fresh is they already speciality in this team. They probably have done something within their funds. And we just need to communicate and also identify clearly what are the subsectors that we are interested in and what are the startups that we're interested in. So without adding a lot of efforts, they know when they have some kind of sector mapping deep dive within the funds, they can think of us, they can probably invite us. We think that's actually a good approach. We've done a lot of things with some of our funds on the solid state battery, on hydrogen, on battery swap. And that's very valuable. And we have a lot of internal colleagues interested in this. So I think really it's the finding the common interest.
Very nice. And I think it also comes back from you being very clear about the why you want to invest in certain funds. So you can be very explicit about why you are interested. Maybe just a tactical question, but I think it matters. Is there a percentage ownership in terms of LP into the fund? You feel like you should not go too low because then you're not important, but not too high. So do you have this kind of percentage that you think is the right balance as an LP?
Yeah, I think majority of our funds, we are relatively low. We're just one of the LP. We are not anchored LP, but we like to select the fund carefully so that for some reason we can also add in value. For example, if they are top funds in France and Total is very present in France and in the top European countries. So that's a value to add for the funds as well, because their portfolio company with some solution, they can quickly test with us and proof of concept. So in that case, even it's a small ticket, but there are some sense for the both sides to work closely with each other.
So it's interesting because we talk about a lot about corporate VCs. You should add more value than just capital to your startups. But what you're saying is that best practice translates very well into, as an LP, you should bring more value than just the capital you bring. So that's a really nice golden nugget. I want to move to the anchor funds, and then we will move to the Asia topic. So for anchor fund, first, how do you define it? Does it mean that you're the biggest LP in a fund? And why did you decide to be an anchor for that fund?
Yeah, so anchor fund, you are like a bigger LP, but you remain LP because you probably doesn't want to be a GP, because GP legally you are on the driving seat, you make decisions, and you have a higher liability. So we prefer to be LP in most of the cases. And then being anchor means you have a higher share of investment, and then you have a higher kind of influence, probably in a sense like an advisory committee, strategic committee, in kind of orienting where the focus can be, but not decision making. We are not in the investment committee, but we're in the strategic committee, advisory committee with governance and things. So we have a bigger role.
How would you differentiate China and India? Because both are extremely important for all the things you invest in. But how are they different? And with a filter as an investor?
I think probably the development stage is slightly different. China probably a bit ahead in many issues, but Indian is really very attractive in its own way. And there could be same issues, but different. For example, battery swap or scooters, a bit like Gogoro, but in China, there are startups who are targeting at the delivery riders, where in this kind of delivery economy, those personnel, they have their two-wheeler, they ride 80 kilometers per day. And it's just such a hassle for them to have to stop and charging.
They need to swap quickly.
Yeah, exactly. And they are the lowest income community. And you really need for them to have a better kind of a utilization rate for their vehicles. So there are a couple of really good startups in this field. And we see them that one of them is created by this high-grade style of high-grade. Some really come from California. And the other one is created by some people really local, very grounded. So we kind of see that, and we were saying, okay, that's very interesting. That can be also interesting in India, because India, the issue is not about two-wheelers, although the two-wheelers are coming, but probably in 2-5 years' time for electric vehicles. The electrification for mobility really happening for the 2-3-wheelers, but the dynamic can be so different, because in China, people probably take a mobike and all that for the last mile. But in India, actually, the 3-wheeler play an important role for the last mile from metro to home, from the office to metro. So we see it's quite similar, share a lot of things, but the details, the economics can be very different.
Now, we talked about China and India, but you're looking after all of Asia. So tell me more about which countries do you expect really good innovations in the energy space?
I think China, India are certainly the top ones because they certainly have those big ambitions about renewable energy, like a huge amount of gigawatt of capacity will be added. And they will also adding on energy solutions, battery and all that. And also it's very important electric mobility in China and India, just massive. And hydrogen, I think both countries are now focusing a lot on hydrogen as well. Hydrogen for heavy duty vehicles and hydrogen for the rest of the economic system. And biofuel probably is important. So all this, I think China, India is undoubtedly most important for energy and climate. But it's also important to see countries like Southeast Asia and Singapore, because Singapore is basically a hub for the good Southeast Asian startup to come. For example, Indonesia, Philippines, there are a lot of like upgrade needs for the energy. For example, Indonesia has so many islands. How do you make a clean and efficient energy system? And upgrade and digital IoT solutions can become very important. All these resorts, all this business, CNI business in those regions, those can be a big thing to follow. And then Australia is just such a giant in terms of renewable energy, in terms of energy storage, and also the potential of agriculture sector in terms of a carbon natural-based solution to lock the carbons. And it's also likely they have a lot of cheap renewable energy that can be making to hydrogen, and those can be then sell to the rest of the regions.
Very nice. Let me double click on the hydrogen and biofuels. Why do you think it's now and it was not 10 years ago? And why is it now the right time to invest versus wait 10 more years?
I think when we look at the energy, we always need to look at what are the big chunk of the base load will come from. So natural gas is already a very mature, lower and cleaner source to replacing the coal before the nuclear is accepted by the public opinion. But then hydrogen is not yet like natural gas now, but hydrogen could be the next one because technology and the potential it can really bring out. And as said earlier on, this is a sector where we still need innovation because we can definitely produce green hydrogen, which is probably can be cheaper in the place where abundant, redundant, curtailed renewable energy. But then there's the issue of store them and transport them because you cannot put them on the grid. Now we think it seems to be rather promising to have a new technology of producing them cheaply in a green way, and also to find out the new technology to store them and transport them. And especially if we see that ecosystem starting to get mature about the use of hydrogen for the mobility sector, because we know that for the four-wheeler, like passenger light duty cars, electrification is the way. We see the battery become cheaper and cheaper, longer mileage. But for the heavy duty vehicles, it doesn't work that the batteries were just too big, take too long to charge, expensive. And hydrogen are the way to really making this sector green. And now we need the system, the hydrogen fueling system and all that. But we see that now the government is pushing, the Germany, French government, and lots of other European governments are pushing for hydrogen. They are putting money for the infrastructure, and private sector, us and Air Liquide, and lots of private sector companies are also working on this in China as well.
So this is really inspiring. Let's move on to something more tactical, which is on the investment side. You mentioned that you follow the rounds when it's a smaller check, but sometimes you lead. What drives you to lead versus follow? How do you think about that?
Actually, most of the time we do a small ticket investment, we follow, and we like to be a syndicate. The reasons behind that is we don't want to be really come in and be dominant. We want the company to be innovative and agile, but we want to see what's happening. We want to see the optionality, the orientation, and we want to be there to discuss with our syndicate co-investors. So most of the time we prefer to be a small ticket minority, but in the board as an observer, so that we see what's happening. We can help and support when it's necessary and needed, but we don't overwhelm the team. So we think that's better. But when it's come to sometimes pretty strategic deals or in for certain geographic location, we can add in a lot of value. In that sense, we don't mind actually to lead as well. So that's the exception.
I really like this approach. It's really about adding value and not ownership percentage or control or anything like this. It's about, we just want to be part of a syndicate. We want to make sure the right investors are joining. How do you build this syndicate? Are you helping building the syndicate for the startups?
We are just communicating with startups. And we think this is good to have a syndicate with financial investors, probably corporate investors, strategic and different. We see a lot of value by people, different investors. They can bring different angles and different values. So we communicate that with the startup. So I used to be in the M&A, and I used to be really naively thinking, I can do big M&A, so I can handle the small venture deal, but it's completely different. In M&A, it's true you are dividing or you are talking about arrangement about something already done, mature, and probably not going to change dramatically in the future. So that's where it's important to see who get what, where are the boundary for the responsibility and liabilities. But I just realized if I just put it on my M&A hat and want to control everywhere, sometimes I can't because they are small companies. And I actually miss the point because venture investment is really to come in, build something that doesn't exist yet. Or we see that it's coming, but we don't have this big thing yet. So it's really somewhere and really coming with this mentality thing. We're not talking about dividing the company. Actually, there are some brilliant ideas and brilliant team, but we're talking about something in the middle and long term in the future. So that's where we see more about how do we see the future, how they can grow, and who can come on board to be very helpful, but not being very detrimental for the company.
I think that's one of the most important golden nugget today, which is if you come with a mindset of control, you're missing the point because you're basically betting on the future. And if you start to control, you're actually anchored and filtered by your knowledge of today, not the bet on the future. My friend and coach, Paul Holland, always tell me, if you invest in a company because you think they will listen to you, don't do that. Well, makes a lot of sense. Now, many corporate VCs struggle with going fast, and you are specialized in Asia where things can go extremely fast. How have you designed your investment decisions and investment committee for direct investments? How have you designed it so that you can be as responsive as the startups need you to be?
That's such a great question. That's actually my biggest challenge in the beginning, because on one hand, I have my corporates with a very solid and prudent system, which has all the reason to be there the way they are. And then I go to China and the startup presume that sometimes we can sign the term sheet after the first meeting. So there are some gaps. In the beginning, we're a bit frustrated, but later on, I think that's where we really need to put our entrepreneurial startup mind, trying to find solutions, because the system within the group exists for a reason, and it's well-intentioned reason. So how can we communicate with the stakeholders within the group to demonstrate we can add value and we are specialists in what we do and have some trust, and also to get some flexibility in what we do? That's a lot of things we need to do. That's like some kind of sustainable thing for us to constantly communicating and educating the stakeholders and showing and making them trust. And on the other hand, probably find ways, if need to be quick, probably we can use convertible loans or some other measures if the situation is needed. So we had some deals so that we are managed to really execute relatively quickly. But that's something constantly need working on.
Very nice. And do you have something that you did that you think really improved and that was not too hard to change? Something you changed in the design so that you could go faster and maybe the audience would want to try?
Yeah. For example, in the beginning, I come from M&A. I like to present a deal when it's really a beautiful, nice, attractive deal. I think it's so important just start once we have a sense this is a great team, this is a great solution. We started to chat to people. And no need to be perfect. It really can be spontaneous. So here I have this opportunity. It's very interesting. They are doing this and that. Just put that on people's mind. Yeah. That when we come back, we just shaking people and asking them to break their own rules and giving us investment. So it's really as early as possible, thinking of who can be the sponsor, potential stakeholder, and people who can supporting this, and just chat with them, share documents with them so that they already know that it exists. They're curious. And then when the final decision comes, it's not so surprised, it can go good.
Very nice. I want to ask my final question on something much more inspiring beyond corporate venturing, which is all about the 2050 goal. What do you think corporate venturing should do? And what can we do to make sure that we achieve the 2050 goal and maybe even achieve it earlier than 2050?
I think it's extremely important to be curious and open-minded, because I think probably more than half of the solution doesn't exist yet. So we just need to constantly be open to all the solutions there. It's a very complicated portfolio. It's not one solution. And I think corporate can certainly play an important role, because those are the big systems and the big kind of projects. Then corporates can certainly adding value by using leverage their existing capacities. And sometimes to have a kind of different approach for some cases can be agile and quick, and to go slightly beyond the border, like why not look at agriculture? It's also big CO2. Anyway, I think it's also important to be really down to earth, to really know the physics. Will that work? That's also important in doing the deals.
Xin, I think I will end on that, but I really like one thing, and I can't agree more with you, which is half of the solutions are not yet invented. And that's really what we should be looking at, is invest in these entrepreneurs that are developing the solutions that are not yet there, will get us to this goal. Xin, thank you for being so nice, open, and candid. This was really nice. Thank you.
Thank you so much, Nicola. It's a pleasure.